Hello everyone, so this is Pam. So the problem that I'm doing is chapter 4, exercise 5. And I'm just doing it on the Excel spreadsheet first just because I've already submitted it on Wiley and it's not letting me delete the numbers. So I'll just kind of take you step by step through of what I did. So to start off, the problem says, in its first year of operations, Ivanhoe Company recognized $29,800 in service revenue, $7,000 of which was on account and still outstanding at year end. The remaining $22,800 was received in cash from customers. The company incurred operating expenses of $19,000. Of these expenses, $13,140 were paid in cash. $5,860 was still owed on account at year end. In addition, Ivanhoe prepaid $3,150 for insurance coverage that would not be used until the second year of operations. So right here, all I've done is just I've written down the numbers that it's given me. So like it said, $29,800 in service revenue, $22,800 received in cash, and then $7,000 that was still on account. And then for expenses, operating expenses of $19,000, $13,140 were paid in cash, and then $5,860 was still owed. And then it also includes that $3,150 for the prepaid insurance was paid this year for the second year of operations. So what we do is for cash basis, or I guess for just net income in general, it's revenues minus expenses. So we're going to start off with cash basis, and the revenue for that would be $22,800, just because that's something that was received, and cash basis is used for things that have been received and paid for. So the expenses that have been paid for would be the $13,140, including the prepaid insurance, which is $3,150. And so what we do is we just do revenue minus expense minus the prepaid insurance, and we get $6,510 for that. And then for accrual basis, the revenue and expense that we used is what occurred during the first year of operations. So that would be the $29,800. And then for operating expenses, it would be the full, which is $19,000. And then the net income for that would be just the revenue minus the expense, and that's $10,800. And I'll just show you guys right here. That's exactly what I got here. And then for part B, it says which basis of accounting provides more useful information for decision makers. And I said accrual basis just because in the book, first of all, it says that cash basis isn't in accordance with the generally accepted accounting principles, or GAAP. And just because accrual basis, it's the net income for things that have occurred during the first year of operations. And so I hope that helped you guys understand a little bit how to do this exercise 5.